Hey everyone, and welcome back to the channel. In this clip, Jesse Myers unpacks Bitcoin's massive growth potential, leveraging his $900 trillion global asset chart to show how it stacks up against the $300 trillion bond market. He dives into MicroStrategy's bold strategy to capture fixed income capital with high-yield vehicles like Strike, revealing how Michael Saylor is redefining Bitcoin's role as a mispriced, high-return asset for institutional investors.
Jesse, I want you to frame this. And you did a little bit of that framing when you said that you think it can eat into a lot of the fixed income market demand that's out there. So talk us through that and what Michael's trying to do here.
Yeah, so this has been very interesting for me, partly because part of how Saylor is thinking about this is referencing a chart of mine. A lot of people have seen the $900 trillion global asset landscape chart that Saylor likes to include in all of his presentations now. And the point of that is to show how small Bitcoin still is, about $2 trillion out of $900 trillion of global asset value. So about 0.2% of the world's value is in Bitcoin, and everything else is in analog store value buckets. 300 trillion of that is the bond market. And those are numbers that I had to go do the legwork to figure out how big are these different buckets in the global asset landscape. And because there wasn't a picture of that, a starting point of here's the lay of the land and how much value there is in the world.
Myers' $900 trillion global asset chart is a powerful visual for putting Bitcoin's $2 trillion market cap in perspective, just 0.2% of global wealth. By mapping out buckets like the $300 trillion bond market, he sets the stage for understanding Bitcoin's growth potential. It's a stark reminder of how much room Bitcoin has to capture value from traditional stores like bonds or real estate.
And I wanted to do the exercise of figuring out what's the full potential valuation of Bitcoin. That has to start with, well, how much value is out there and how much could Bitcoin siphon away from existing store value buckets over time. So that's the exercise I did and put out in Bitcoin's full potential valuation, an article a couple of years ago that Saylor liked a lot, and he started using that chart and then also that valuation framework in his Bitcoin 24 valuation model.
So this is the one that Jesse built that Michael has been using, which I also used in a presentation. I think everybody
a lot of people have been using it. It's a helpful starting point, I think, for
sure. But for people that are looking on YouTube or the video of this, you can see the chart that we're referencing.
Yeah, so with that starting point, Saylor has been thinking in terms of this framework for the last few years. And I see him talking about it and thinking in that way in his interviews. Most recently, he did an interview a couple of weeks ago where he said, we're tapping into the fixed income market. There's $300 trillion in fixed income, and so I want 1% of it.
Myers highlights how Michael Saylor leverages the global asset framework to pitch Bitcoin as a tiny but disruptive player. Saylor's focus on siphoning just 1% of the $300 trillion bond market, $3 trillion, shows his ambition. It's a bold play to reposition MicroStrategy as a bridge for fixed income investors to access Bitcoin's upside without direct crypto exposure.
And that's very revealing about what these recent steps have been designed to enable for strategy. I think that these vehicles, Strike and Strife, the point of them is to be able to receive up to $3 trillion of capital from the bond market because strategy is able to offer a more attractive deal than what you get really anywhere else in the fixed income market. So if you're a fixed income portfolio manager and you're trying to figure out how do I outperform, how do I deliver yield to this portfolio that I'm managing that has to be fixed income, has to be bonds basically. Strife's effective starting offer is 11.8% of annual dividend, basically annual interest to buyers. That's pretty incredible, especially if you understand, MicroStrategy is very over-collateralized and has a much stronger balance sheet than I think people realize. And also, Bitcoin is less risky than people tend to believe. So if you're a portfolio manager and you wrap your head around, actually, this is mispriced risk. This thing shouldn't be 11.8%. The actual risk here is more like 5%, then you've found alpha, basically. And that's your way to outperform your peers and, get a promotion, basically.
The 11.8% yield on MicroStrategy's Strike is a jaw-dropping offer for fixed income managers, especially when Myers notes Bitcoin's mispriced risk. If portfolio managers see the true risk as closer to 5%, they're getting a massive edge. It's a clever way to lure bond market capital into Bitcoin's orbit, disguised as a familiar fixed income play.
So I think that there's a ton of capital in the bond market that's constantly looking for the best, risk-adjusted returns out there. And because of the Bitcoin Treasury playbook that Strategy is deploying, they have an edge. They have alpha that they're offering to the market. You can participate in this. You can basically ride Bitcoin and outperform everything else. And all you have to do is hand over your dollars to Strategy, and they will convert that into Bitcoin for you and be able to service this debt at a mispriced risk rate, basically paying you more than the risk you're taking, because it's actually less risky than people realize.
Yeah. Something else that I find interesting about doing this preferred, but it performs like fixed income, is that if he wants to issue more shares, he can just keep issuing more shares and raising the cash that's generated from issuing those more shares. And then he just has a bigger dividend. I'm calling it a dividend expense as he issues more of those shares. And so the amount, correct me if I'm wrong here, goes up to $21 billion worth of preferred stock that he can issue total to continue to just basically issue more stock, get the cash, buy more Bitcoin.
You're talking about Strike specifically, right?
Mm-hmm.
Yeah. So there's been a fast sequence here of things that have rolled out from Strategy. They launched the Strike preferred stock not that long ago. They got it off the ground with a couple rounds of initial investment into it. And then they recently announced that they're doing a $21 billion at the market program, meaning that they're telling the SEC we're going to be issuing up to $21 billion worth of new shares of Strike over time. And we're going to sell that directly into the market.
MicroStrategy's At the Market program is a game changer, letting them issue $21 billion in Strike shares with minimal friction. Myers points out the inefficiency of past convertible notes, which took months. This new setup allows Saylor to seize market opportunities instantly, turning favorable conditions into quick Bitcoin purchases.
And this is really, I think, what people should know about these vehicles is this is why they exist, because Strategy to date has had to go through individual convertible notes, and that takes time. You have to draft the document.
And money, yeah.
And money, right. There's a lot of friction involved in an individual security issuance, and it takes time. And I think that the time part is a big part of the frustration for Strategy, because they would announce a convertible note, they'd work on it, they'd announce it, they'd price it, they'd go sell it to the market, they'd close the round, they'd take those funds and buy Bitcoin. That would take a month or 2 or 3, and you're not able to capitalize on market conditions if you're on that kind of time scale. But with an at the market program, if MicroStrategy's stock suddenly spikes, or more particularly, if Strike is traded at a market price that is favorable to Strategy to issue more shares, they can do it. And they can just, create more shares out of thin air, basically new promissory notes to that new shareholder, and take those dollars hand over fist, up to $21 billion for now. And that's just an arbitrary threshold. They can announce to the SEC that they're going to raise $210 billion next through these same vehicles. And so I think the next step would be to roll out an at the market program for Strife, probably a $21 billion one, because it's a meaningful number for Bitcoiners. And then they'll just keep selling into the market. And meanwhile, they're educating institutional investors, the credit agencies, and trying to get the word out about this is mispriced risk. we're giving you a great opportunity. And the reason we're doing that is because we know we're going to make 30 to 60% a year by buying Bitcoin, and we're willing to give you 12% a year to do that. And you're not going to get that anywhere else. So I think that's the machinery that they're setting up here, which will allow them to sell directly into the market with no time lag. They can do it same day whenever conditions are favorable to them and get dollars.
Myers nails the efficiency of MicroStrategy's capital raising machine. By offering 12% yields while expecting 30-60% Bitcoin returns, they're essentially arbitraging mispriced risk. Educating institutions about this opportunity could unlock billions as Saylor bets on Bitcoin's long-term outperformance to cover the interest costs.
And those dollars can be used for working capital. So this gets back to the question of how are they going to pay the interest expense going forward? And I think, I don't know this, but I think my speculation is that we've reached a milestone for what Strategy can do using its existing business and existing cash flow.
Yeah.
And so I think that they are comfortable with servicing debt using newly issued debt going forward, or whatever other instruments they have. At this point, they have 4 different ways they can get dollars through capital markets. And in Strife and in Strike, they note that the funds from selling new shares into the market can be used for either acquiring more Bitcoin or for working capital. Mm-hmm. And so working capital is an umbrella term, but can include servicing debt.
Yeah.
This was a fascinating discussion with Jesse Myers, offering a sharp perspective on Bitcoin's potential to disrupt traditional finance. Myers broke down his $900 trillion global asset chart, revealing Bitcoin's tiny 0.2% share of global wealth, and dove into MicroStrategy's innovative strategy to tap the $300 trillion bond market. He highlighted how Michael Saylor's high-yield vehicles like Strike are luring fixed-income capital, positioning Bitcoin as a mispriced asset with massive upside for institutional investors. The 3 main lessons from this conversation are: 1. Bitcoin's growth potential lies in capturing traditional assets. Myers' $900 trillion chart shows Bitcoin's $2 trillion market cap is a mere fraction of global wealth, with the 300T bond market as a prime target. By siphoning just 1% of fixed income capital, Bitcoin could surge to 5 tiers. This framework underscores how Bitcoin can grow by competing with analog stores of value like bonds and real estate. 2. MicroStrategy's Strike offers bond-like yields. With Bitcoin Upside, MicroStrategy's Strike vehicle, yielding 11.8%, is a game-changer for fixed-income managers. Myers explained that if managers see Bitcoin's risk as mispriced, closer to 5% than 11.8%, they've found alpha. This allows bond portfolios to access Bitcoin's returns indirectly, making MicroStrategy a bridge between traditional finance and crypto. 3. At the market programs unlock frictionless capital for Bitcoin. Myers detailed how MicroStrategy's $21 billion at the market program for Strike eliminates the delays of convertible notes. By issuing shares instantly when market conditions favor, Saylor can rapidly convert capital into Bitcoin, amplifying MicroStrategy's treasury strategy. This efficiency could redefine how companies leverage Bitcoin for growth. So, what do you think about this Bitcoin conversation? Let us know in the comments section below. If you enjoy this type of content and want to see more, make sure to give this video a like and subscribe to our channel. Until next time, keep learning and keep stacking